Howdy, everybody. Welcome to Liberty Call. Today is Friday, January 24th, 2025. Hope you're having a fantastical day out there in the interwebs. It was a nice day here. Looks like some high clouds are coming in and making it kind of overcast, and we got some more snow tomorrow. So, yay! So, got out, got some chores done. That's why I'm a little bit about an hour behind today. I apologize. Hadn't been out of the house since Monday of last week, and I was running out of food. So, anyways, all right. Well, big moves in the banking world as Italy's Monte di Paschi launches a massive takeover bid for Mediobanca, shaking up the sector. Over in Davos, Trump is pushing for lower global interest rates while the IMF and ECB stress European reforms. Markets are mixed today. Manufacturing is up, but consumer sentiment is slipping. In the UK, confidence has hit its lowest level in over a year. And in the US, retail is in trouble with a record 15,000 store closures expected this year, thanks to the rise of Shein and Temu. All right. Well, before we dive into the news, I need a favor from you. Can you give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell? All right. Well, now we can get into the news. Where is it? All right. Let's get to the markets for today. Dow Jones was down 0.32%, 140 points, closed at 44,424. S&P 500 down 0.29%, 17 points, closed at 6101. NASDAQ down 0.5%, 99 points, closed at 19,954. The VIX was also down today, a little strange, 1.13%. VIX is currently at 1485. Canada was up 0.14, Brazil down 0.03, and Mexico up 0.53. Headed to Europe, Germany was up 0.04, the UK flat at 0. Let's see here. France up 0.44, Netherlands down 0.86, Spain 0, Italy 0. Maybe their markets were closed. I don't know. Let's see here. Switzerland up a tenth of a percent, and Portugal down 0.25%. Russian exchanges green today, then MOEX up 0.91, RTSI up 1.77. And the overnight markets, Nikkei in Japan was down a tenth. Australia up 0.36. New Zealand up 0.31. In China, the Shanghai was up 0.7. Shenzhen Component up 1.15%. China A50 up 0.13. DJ Shanghai up 0.93. Hang Seng flat at 0. And the Taiwan weighted up 0.97. All right. So those are our markets for today. Who wants to see how they did for the week? I do. All right. Well, let's bring up the chart. All right, let's get all my lines and stuff off the screen. Starting out with Friday of last week to today, we are up on the Dow Jones. We're up 2.15%. We did have a short week with the holiday on Monday. All right, S&P 500 is going to be up about 1.76. NASDAQ is up about 1.06. The Dow Utilities looks pretty flat, up 0.05, and the Dow Transports up 0.92. So all in all, not too bad for the week. Let's look at the daily chart, go back to the Dow, and see what it looks like. As we zoom in, this downtrend began right at the beginning of December and lasted through, looks like we broke through the trend line on the 14th. And probably in the hopes of the new administration coming in, and it has been up and away since, all through this week and most of last week. So we'll see. Just curious to see where it's going to go. Let's go over to the S&P. Fairly similar, not quite as pronounced on the downtrend since December. Same with the NASDAQ. Looked like it was starting a downtrend, and then it broke through in early January. So, all right. So those are our markets for the week. Let's get into some data and see how that. It was a light week on data, unfortunately. There wasn't a whole lot that came out. So starting out with initial jobless claims, they came in at 223,000 for forecast was 221, previous number 217. Continuing jobless claims came in at 1.899 million. Forecast was 1.86, previous number 1.853. Federal Reserve balance sheet came in at $6.832 trillion. The way they put the B's and the T's and the M's, but it is trending down, which is a positive thing. I mean, we did have this massive jump here with all the COVID spending, and then it continued to trend up, and it's been trending down for about 2 years, I guess. Existing home sales came in at 4.24 million. Let's see here. The forecast was 4.19. Previous was 4.15. Existing home sales month over month grew at 2.2%. Previous was 4.8. And last, the Michigan consumer sentiment came in at 71.1. Forecast was 73.2. Previous number was a 74. All right. So that's all the data for the week. Let's get into the market recap. S&P 500 ends lower, but notches second weekly win. All right. S&P 500 reached a new record high on Friday before pairing some gains as investors assess corporate earnings and economic data. The market is set to close its second consecutive positive week, supported by President Donald Trump's remarks at the World Economic Forum in Davos, where he stated he would demand that interest rates drop immediately. Okay. Thanks, Donald. Never mind that inflation is still stronger than everyone wants to talk about, and we've had zero deflation. But Don wants low interest rates because it's cheap money, and it gooses the economy at the consequence of future inflation. Read some Austrian economics, folks. All right, corporate earnings overview. Verizon Communications saw its stock rise over 1% after reporting its strongest quarterly wireless subscriber growth in 5 years. Conversely, American Express shares fell 2.4% despite a 12% rise in fourth quarter profits as holiday spending boosted card usage. Boeing faced a 1.2% decline after announcing a larger than expected $4 billion loss impacted by a prolonged strike and job cut expenses. Texas Instruments plunged 7% after issuing weak first quarter profit guidance due to inventory buildup in its automotive and industrial sectors. In contrast, Twilio surged 21% following optimistic earnings projections through 2027. The tech sector in Lunar Innovations. Meta reached a record high driven by plans to invest 60 to 65 billion in AI infrastructure this year, fueling investor optimism. Intuitive Machines gained traction after securing a $2.5 million NASA contract to advance lunar cargo logistics and mobility solutions. Sounds like a boondoggle. Everything with NASA is a boondoggle. I've shut it down right now. All right, last section here. The University of Michigan's Consumer Sentiment Index fell to 71.1 in January from 74 last month. The lowest in 6 months. Attention now shifts to the Federal Reserve's upcoming meeting, where policymakers are expected to keep rates unchanged despite concerns over potential inflationary impacts of Trump's proposed tariffs. Analysts suggest that the Fed will likely view such effects as short-term price level adjustments rather than sustained inflationary pressures. Additionally, the Bank of Japan raised its interest rates by 25 basis points, marking its third hike since reversing its ultra-loose monetary policies in early 2024. All right, so that's all the news. Let's get to some data. December existing home sales. Existing home sales ended 2024 on a positive note, despite a full year total being the lowest in nearly 30 years. Sales rose 9.3% year over year, marking the fastest 12-month gain since 2021. However, the annualized sales pace of 4.24 million homes remains significantly below pre-COVID levels of approximately 5.25 million and far below the pandemic peak of 6.5 million. Well, that's because everybody was leaving the blue cities to get away from retarded, policies and rules. One major challenge facing the market is the rise in mortgage rates. Despite the Federal Reserve's rate cut since September, 30-year fixed mortgage rates have climbed back above 7%, preventing the expected boost to affordability. Many potential buyers remain hesitant, resulting in continued subdued sales activity. Meanwhile, home prices continue to rise, with the median existing home price increasing 6% from the previous year. A noticeable bifurcation in the housing market has emerged. Sales of homes priced at $250,000 and above have surged at double-digit rates, while lower-priced home sales have contributed to the decline. This trend suggests that while wealthier buyers and sellers are adapting to higher interest rates, while affordability challenges persist for lower-income buyers. Inventory in the lower price segment has dwindled due to inflation, pricing many potential buyers out of the market. And also 50 to 100 million illegal aliens in the country. That makes a major difference in housing. Many homeowners are also unwilling to sell due to the mortgage lock-in effect, having secured lower rates before 2022. However, inventory levels have shown improvement, rising 16.2% year over year, pushing the month supply of homes to 3.3, a step towards normalcy, but still below the 5.0 benchmark. Despite sluggish sales, tight inventory is preventing a significant drop in home prices, differentiating the current market from the 2008 housing crisis. In other economic updates, initial jobless claims rose 6,000 to, we already covered jobless claims yesterday. And let's see here. The Kansas City Fed Manufacturing Index remained at -5 in January, reflecting ongoing challenges in the factory sector. All right. One more article to cover before we're done for the day. This comes via Zero Hedge, double-digit hike in homeowners insurance rates for the second consecutive year. This was written by Naveen Athrapuli via the Epic Times. Sorry if I butchered your name. All right. Homeowners across the United States face steep increases in insurance premiums in 2024, with rates rising over 20% in several states, according to a recent report from S&P Global. On average, insurers raised rates by 10.4% last year, following a 12.7% hike in 2023. The largest increases were seen in Nebraska, 22.7%, with Iowa, Minnesota, Montana, Utah, and Washington also experiencing hikes above 20%. Meanwhile, Florida saw the lowest increase at just 1%, followed by Texas at 3.4% and Nevada at 4.3%. American Family Insurance Group led the way among top insurers, increasing premiums by 16.5%, followed by Liberty Mutual and Progressive. According to the Insurance Information Institute, rising costs of construction materials and mounting natural catastrophe losses have been key drivers of the surge in homeowners insurance premiums. The cumulative replacement costs of homes jumped 55% between 2020 and 2022, further pressuring insurers' profitability. Even before the pandemic, insurers were struggling to maintain profitability, with companies paying out more in claims than they earned in premiums. In 2023, insurers paid out $1.11 for every $1 collected, raising concerns about their financial sustainability. Experts warn that soaring insurance costs are making homeownership increasingly unaffordable, particularly in high-risk areas like coastal regions prone to storms and flooding. Some homeowners have seen premiums increase tenfold, forcing them to reconsider staying in their homes. In California, the situation is especially dire, with the growing number of real estate deals falling through due to insurance issues. Nearly a third of realtors report clients struggling to obtain coverage, exacerbating the state's already strained housing market and affordability crisis. Rising insurance premiums are adding to homeowners' financial burdens, potentially discouraging new buyers from entering the market. Well, a lot of California's problems are self-induced, simply because they don't take care of their wildlands and allow brush and the forest to have too much dead growth, and that causes doesn't take much. I mean, I live in a pretty arid environment here in Colorado, and that's every year we clear off our property. I mean, I could always do more because there's always, probably 50 trees on my 1 acre lot. But you do the best you can, try to keep your wildfire exposure to a minimum. But I'd rather deal with wildfires than deal with the hurricanes I had to deal with in Houston, because it just washed away your entire house, especially as close to the water as the section of town I grew up in and raised my kids in. The Clear Lake area, I mean, it's not on the water, but it's close enough that you get hit pretty hard when the storms come up through Galveston Bay. So, all right, well, that's everything to have to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help you get on track. All right. Well, I hope everyone out there has a wonderful weekend, and I shall talk to everyone again next time. Adios.